Namaskar. We'll be discussing today on the topic called classification of investors. Now, who's an investor? That's $1 million question, right? It's very easily being said that I'm an investor. Everybody says I'm an investor. But investor hota kya hai? Who's an investor? That's what we are. And what are the different types of investors? That is what we will be uh, doing it in today's lecture. So an investor is basically an individual that puts money into an entity such as a business or for a financial return or something, right? The main goal or the objective of any investor is basically to minimize risk and maximize the return. That is what for anybody invest in any business or any entity or any venture, right? And it's the ultimate aim is to maximize benefits or profits and with a minimum of risk. It is in contrast with the speculator who's willing to invest in a risky asset with the hopes of getting a higher profit. Normally, a speculator is also a form of an investor, but since he does it for the quicker return or riskier return and does not hold on to investment for a long period, that is why he is called a speculator who wants a windfall profit as against the normal profit for an investment or let the investment grow into a profitable venture. There are another words for the term called investor. Some synonyms for investors are banker. A banker is also an investor because it lends money to the corporates or the individuals or business houses and all for the return in the form of interest rates and all. And then lenders, other than bankers, financial institutions or say money lenders or private institutions or your friends, relatives, etc., they also lend you money at times. So they are also in the form of an investor to that extent. Then the major ones are known as shareholders or stockholders. Shareholder is a person who shares in the equity shareholding or in the equity base of a company, and the stockholder is basically, a percentage of stock he is holding in the company's shares. And this is, they are to the extent they're holding these investments, they are known as part owners of the company. Then there is venture capitalist. Capitalist is we'll be doing it later, but right now I'll just touch it up here to the extent that venture capitalist is a sort of an investor who collects money from others and on their behalf invests in the securities market or other ventures for earning a higher rate of return as compared to other businesses and all that. They look for a high return ventures. And then there's a term called backer. Backer is a typical type or group of persons or corporations and all that, or a typical group who keeps on looking for opportunities for investments. They have money, but say sometimes they get together and they bid for big projects and all that. So they are called backer. There could be institutional, there could be corporate backer, there could be individual backers as well. And then there's another term called capitalist. Capitalist is a person who believes in the capitalism theory of economics. Capitalism, as all of you know, is basically where the economy runs through the capital market or privately. That means the properties, the income, the businesses, etc., everything is being owned and controlled by individuals or the corporates and all. And it is the owners, they want the maximum business, maximum return out of that. They, whatever they do, wherever they deploy their resources, they do it for the purpose of personal gain or profit. That's the basic concept of capitalism. And the person who believes in this capitalism theory, they are the persons who are who invest in certain ventures or businesses and all that, keeping in mind the profit as a motive, and that is why they are called capitalists. They are also a type of investors. Now, what are investors called basically? A distinction can also be made between the term investor and trader, in that investors typically hold position for years to decades, also called position trader or buy and hold investors, while traders generally hold position for a very shorter periods. You see, those investors who hold for, or known as position traders, who hold or buy or hold investment for long, they do it to let the value increase, to enhance the value of the investments before they wind it up for the liquidity. Whereas a speculator, he looks for a short-term gain and looks for a very short duration during which he can earn, and by rotating his investment in the short term, he tries to he tries to maximize his return from the investments. Types of investments. There are there are three main types of investments basically. We can either invest in stocks, or one can invest in bonds, or one can invest in cash equivalents. You all understand what is all this: stocks, bonds, or cash equivalents. Stocks is basically stocks of the company or shareholding of the company and all that, and bonds are the money, that is the debentures or lent out money to the company in the form of bonds, etc., which earns a typical rate of interest over quarterly, half yearly, or yearly, and are matured. On the maturity, they get the complete amount of investment plus whatever interest they have earned, that is their earning on that. Then the cash equivalents such as gems and jewelry, etc., or property and all, that's the third type of investments. On the basis of these types of investments, we can classify the investors into a simple way of classifying investment is to divide these three categories into the investment methods, which could be: one is debt investment, that is you lend somebody the money, and which is called loans and all that in the general parlance. You earn interest on periodical basis. It could be monthly, quarterly, half yearly, yearly, simple or compound as the terms you agree with. Or the next type of investors on the basis of these categories can be equity investments, whereas it is called company ownership, right? Where you invest in the company ownership, although on minuscule basis or the major basis, depending upon your amount of investment or your type of investments and all that. There could be a third type, which is a hybrid investment, which is nothing but a concoction of the above two, that is debt instrument as well as equity investments. It is in the form of a convertible debentures, convertible securities such as convertible debentures or preference shares, convertible preference shares, etc. Or you can name it anything. The security could be named, but the basic form is partly or fully convertible. It is also known as mezzanine investment or private investment, capital preferred shares. Then before they are categorized into their different subtypes, an investor is first categorized based on two main categories: active investor and passive investor. Now, who's an active investor? Active investing is highly involved. That means, as the word goes, active investor. The active investor would be very highly involved in the investments he does. Unlike passive investors who invest in a stock when they believe in its potential for long term appreciation, active investors typically look at the price movements of their stocks many times a day. Usually, active investors are seeking short term profits. What they do, because as you're all aware, in the stock market, the price movement into in any stock is fluctuating from morning till the afternoon till the market closes down. So during the day, whenever the stock is fluctuating, an active investment is definitely keeping a watch not only on the stock but on the other economic activities as well as the political movements also, so that he knows what is going to be the outcome by the evening before the market closes, and he is very actively involved in all these things. Plus he also looks at the other investments such as the price of gold, property and all that, as to how it is going to affect his investments. That is called an active investor, and he is very much involved in his investments from morning till the evening. Then, as against the active investor, who are the passive investors? They are also known as buy and hold strategy investors. Passive investing means buying a security to own it for the long term. Unlike active traders, passive investors do not seek to profit from short term price fluctuations or market timings. They look at the potential of the stock, they look at the potential of the company in whose stock they have invested, and its growth over a long period of time. When they are comfortable and they are firm enough, they believe it that it is going to get them good return in future, they just invest and sleep over it, sort of, and that is why they are also known as lazy investors. As we all know, lazy investors means those let it go. We will, I mean, not pay much attention to it, not be much involved in day-to-day affairs and all that, and let it grow. And once it grows to my expectation, I will liquidate it and earn my revenue or earn my return on the same. Broad categories of investments are two types. You see, normally whenever we invest, there are two types of broad investments. One is equity, the other is debt. That's the broad investment. An investor may either invest in the equity or in debt or a combination of the both. Now, classification based on the size. There are two types of investors as on the basis of the size. One is the retail investors and the other is institutional investors. Retail investors, as you all know, is as the term goes, a retail investor is someone who buys and sells equity shares, commodities, contracts, mutual funds, or exchange traded funds through traditional or online brokerage firms or other types of investment accounts. They are the ones who limit their investments to a smaller sums and all that, and they spread their investments in the sense that they don't keep all the eggs in the same basket, and they keep it in different baskets, so that their principal is safe, and they, even if they do lose on one count, they at least are able to save it on the other basket. Now, SEBI law defines retail individual investors as an investor who applies or bids for securities of or for a value of not more than 2 lakh rupees in any IPO or FPO, that is initial public offer or further public offer by any issuer of the securities and buys or holds shares worth less than 2 lakh rupees in a stock. There is no such limit in commodities to define a retail investor. And you see, with the help of this limits, the number of investors in the country has increased tremendously because with every small investor, they're also known as small investor or small investor, it is going to, the number of investors is going to increase, which will ultimately help in generating more and more capital for the economy. And this capital, once rooted in the economy in the productive manner, would generate more and more revenue or growth of the economy, and hence will enhance the GDP of the economy. This is how the investors, these retail investors also help in building up the economy of the country. Retail investors purchase securities for their personal accounts and often trade in much lower amounts compared with institutional investors. That is why they are also known as small investors. Institutional investors, an organization or company that pools funds from various sources such as individuals or entities and invest them in different market securities such as stocks, bonds, forex, that is foreign exchange, foreign contracts, etc. on their behalf. They are known as institutional investors. The peculiarity about institutional investors are that they do not invest their own money into the market, into these securities. What they do is they collect money for, and they collect a pool of money from various sources such as individuals, such as entities, companies and all that, or some funds, etc., and then put them in various securities to minimize the risk and maximize the return. That is any investor's objective ultimately. They include such institutional investors. The best examples are hedge funds, mutual funds, endowment, pension funds, and examples of institutional investors. Institutional investors are considered savior than the average investor and are often subject to less regulatory oversight. Now, why they are considered savior? Because they are considered, they are very shrewd, and they're having, you know, they're having the expert knowledge, technical knowledge, and very shrewd ability to make good judgments on the investments they make. That is why they are known as savior rather than an average investors. They are savvy investors. There are broadly 6 types of institutional investors. We will be doing it one by one. A mutual fund. The first example of institutional investor is a mutual fund. Mutual funds are vehicles facilitating investments in variety of securities with capital commitment from several investors. It could be both individuals or otherwise. Now, every day in the newspaper you see one or the other scheme of the mutual fund. There are n number of mutual funds registered with SEBI, and the various schemes of these mutual funds are registered with SEBI. So then investor has, depending upon his objective, depending upon his goal, has an option to invest in either of these schemes and can avoid the risking of his capital for want of the technical and expert knowledge of the stock market. So that is where the mutual funds come very handy, and they invest in a big way. That is why they fall in the category of institutional investors. And each mutual fund, normally for each of these schemes, has a qualified fund manager who handles each mutual fund and the scheme thereof. Nearly every mutual fund includes an array of liquid securities. That means each mutual fund has a variety of liquid securities which gives a comfort enough to the members may retract their investments at any time. In case you need to liquidate your investment in a mutual fund, since they have a whole range of liquid securities, so you can anytime liquidate your investments and can get back your investment and the return thereon. So securities invested via mutual fund usually span across several industries or types. It is designed to minimize the risk of capital loss, wherein the gains from one dilute loss in another security kind. Normally, what mutual fund does is mutual fund allocates its investments in such a fashion, such a manner that it doesn't keep all eggs in one basket. Say there could be equity based mutual fund who will be investing say 80% of the investments into equities and 20% in either government bonds or the other debt instruments and all that, to ensure that in case there's a loss in the equity market heavily, then they can at least mitigate it through the debt instrument invested in the debt instrument or the government securities. That is how they balance the fund, balance the investment for the benefit of the investor. And that is what the mutual fund is known as, a balanced investor in the market, and it helps in basically the economy to get huge capital inflow for the corporates and the economy. The gap, the burden on the banks is being reduced by their investments. Next type of investor is the hedge fund. Hedge fund can be best described as an investment partnership where the money collected from members is pooled to invest in the securities. Here there is a fund manager who is called the general partner and a bevy of investors called limited partners. A bevy of investors means a particular or typical type of investors who are interested in some specific or particular type of investments or particular industry where to be invested in. And these funds, they collect money for and on behalf of the limited partners. Those limited partners, they commit their amount of investments to the fund, to the hedge fund, who in turn invest for and on behalf of those limited investors whenever there's a good opportunity of making a much better and huge investments, or the investments which can earn big gains on their investments. Their characteristics are somewhat consistent with mutual funds to reduce risk and enhance returns via diverse portfolio. Hedge funds distinguish themselves with more aggressive investment policies and are more exclusive compared to mutual funds. Normally, hedge funds, they invest very aggressively. They invest in riskier projects where they expect that the returns are going to be big ones. So that is why they are also perceived as riskier investors. And naturally, when you take a risk, the returns are even more substantive there. The next type of institutional investor is the insurance companies. Insurance companies are heavyweight institutional investors. Normally, these institutions employ the premium they receive from policyholders into the securities. Since aggregate of premium is considered, their investments are also sizable in nature. The returns insurance companies receive from trading are deployed to pay for claims, And you see, especially in insurance companies, normally you would appreciate that since they are so huge investments which they have made in the market, and virtually everybody takes life insurance. And life insurance, the major part, that's the term insurance. God forbid, God willing, nothing happens wrong with you. But in case you live your life beyond the policy period, your premium which you had been paying for term life, that is being forfeited by the insurance company. You don't get any return on that. It is only within the insured period that in case any mishap happens, in case any mishappening happens to you, then your dependents and all that, your heirs, they get the claim. They can claim the insurance amount, and that is what the insurance companies give. So most of these insurance claims, which is unclaimed, insurance premium which is unclaimed, that is the profit of the insurance company, and that's how they run it. Next is endowment funds. This is something very interesting, very good type of investors. You see, normally all these educational institutions, these are being set up by the foundations where the administrative or the executive entity utilizes the funds for its cause. Typically, schools, universities, hospitals, charitable organizations, etc., they establish these funds for specific purposes to achieve a specific objective or purpose, and whenever they do it, uh, what they do, the endowments, the uh, what do you call, the gifts, etc., and all that, what they get from their ex-students or some other agencies and all that, they keep them intact as the principal amount, and that principal amount is being invested in various securities, etc., generally being invested in the government securities or the debt instruments, so that the principal and the investment is safe. And whatever earnings they get out of that, that earning, they don't touch the principal. The earning, the what they get, they invest that earning for the cause of the endowment fund for which it had been established. Here the investments usually act as a deductible for the investor. These funds are so designed that the principal remains intact, and the controlling organizations uses the investments income to finance its activity, such as some research activity or say some development of a particular molecule or something, or some new medicine, etc. Some new policies which they have to implement for doing research for the implementation of the newer policies, etc. That's what for they use the earnings out of these investments of endowment funds. They use it for the purpose for which they had been established. Then there are pension funds and all that. These pension funds are also a very popular form of institutional investors. Both an employer and employees can invest in pension funds. The accumulated capital goes towards the purchase of different kinds of securities. Now, there are two kinds of pension funds. One is where the pensioner receives a fixed sum irrespective of how the fund would fare. And the other is where the pensioner receives returns based on the performance of the fund. Apart from these types, commercial banks are also considered as institutional investors. Then the last one is the foreign institutional investor. A foreign institutional investor, which is commonly known as FII, is an investor or investment fund investing into a country outside of the one in which it is registered or headquartered. That means, in nutshell, the FIIs are the institutions. Wherever they are registered, they don't invest in that particular country, rather they invest in some other country rather than their home country. FIIs are in they can include hedge funds, they can include insurance companies, pension funds, investment banks, and mutual funds, or a combination thereof. Each FII or sub-account of the FII has been permitted to invest up to 10% of the equity of any one company, subject to the overall limit of 24% on investment by all FIIs, NRIs, and OCBs. See, in simple terms, if I tell you that any FII can invest into the capital of the company only up to 10% of its total paid up capital of the company. And number of FIIs, including NRIs, including overseas corporate bodies, OCBs, all inclusive of them, they cannot invest more than 24% in any particular companies, more than 24% of the paid up capital of the company. However, this 24% limit can be raised to 30% in the case of individual company who have obtained shareholders approval for the same through the resolution of the shareholders. Then difference between the investors. What is the difference between institutional investor? I mean, we have all done it, retail and the institutional investor. What is the difference between the two? The basic difference is on the basis of definition. The institutional investor, they don't invest their own money. What they do is they collect money for and on behalf of others. They collect money from others, they pool it up and invest in securities in large volumes on behalf of others' entities. And what is the scope of theirs? They can deal in security of any markets of all kinds, and they can influence the investors, can impact the demand and supply of securities, and can affect the trend or the movement of the price movement of any stock in the securities. Whereas in case of retail investor, he deals in securities via brokerage firms or other facilitators. Specific markets like forward markets are not particularly accessible by retail investors. Retail investors do not possess the kind of influence individually to direct the price movement of any security. Investors' personality traits. You see, on the basis of the personality also, there are different types of investors, and there are 6 types of investors, and some related personality characteristics of these investors are, these 6 categories are busy investors, casual investors, cautious investors, emotional investors, informed investors, and technical investors. Let's do it one by one, each one of them. First, busy investors. The busy investors are interested, some might say obsessed, with the markets. They follow the ups and downs of equity, gold, or real estate prices. As a result, they tend to buy and sell frequently, often based on what they see others doing. Normally what happens, as I had shared earlier also, that it is somewhat more like an active investor. Busy investor or active investor is more or less the same. They at times look at what others are doing, how they are faring, how they are investing. So they get influenced by the trend the market is showing on a particular day or at a particular moment, and they keep themselves very busy, very active with regard to the same. The day traders fall in this type. These active investors can also be high rollers, willing to take a charge on the market volatility rather than sit it out. You see, they think that they are smart enough, they are shrewd enough to outbeat or outclass the volatility in the market rather than sit out quietly and not doing anything like passive investor. They often share personality characteristics with entrepreneurs for whom financial success is a scorecard. You see, normally what happens, an entrepreneur would never sit idle. He would always be willing to grow more and more and more and try to earn profits at any given point of time. Whatever he sees or looks at things, he would see that he can make money out of it and he can grow his business. So the busy investors have the similar type of characteristics or traits. That is why they are being compared with entrepreneurs as well. Next type of investor is a casual investor. The casual investors are the opposite of the busy investors. Once an investment is made, they tend to let it ride, believing that it will take care of itself. These passive investors tend to trust in the advice of their financial advisors. They are also known as lazy investors. They typically prefer safe investment that have proved their value in the past. Sometimes their lazy fear, that is laziness, approach to investment is a sign of their optimism that everything will work out well in the end if you just let things take their course. This is based on the old theory. I mean, let time speak for itself and let the time grow your investments. Third is the cautious investments. Cautious investors, as the term goes, tend to be the most risk averse. They don't want to take risk. They're very, very careful about taking the risk, putting financial security first. They take their time when faced with decisions, preferring to weigh all of the options before choosing. Afraid of making mistakes, their pursuit of the perfect decision can mean making no decision at all. They at least are so cautious that they fail to make investments at time and lose good opportunities of investments. This puts them in the passive investor category. Older investors who are more interested in safeguarding their resources and have shorter horizon for recouping losses often fall in this type, and these are the type of investors who normally go in for fixed deposits or you see government bonds and all that, municipal bonds or debt instruments rather than investing in equities market, not taking any sort of risk and keeping their principal intact with and being satisfied with little return rather than taking any risk. The other type is emotional investors. Again, on the basis of the characteristics, this is another type of investors. These emotional investors are very interesting. They put their heart into their investment decisions, not their head. For example, they are likely to invest in companies because they use and like the firm's products, regardless of the stock's performance, or to hold on to real property in a depressed neighborhood for sentimental reasons. These are the types of investors. You see, just because their father was working in a company or they had been working in a particular company or they worked in a particular company, they have been using the products of a particular company and they have some sort of emotions or sentiments involved with a specific company or stock. They would just invest and stay invested in that company rather than liquidating themselves, even if the stock has outlived its life. They can be blend of active and passive in their approach, eager to make investments. They feel sometimes committed but unwilling to let go of those that have outlived their value. Normally, such investors, in case of properties and all that, are there. Even if a particular area has depleted or has, outlived its life, and there are only negatives in that area now, and no scope of enhancement in the value of that investment, they still would not let it go. They will say, no, we have emotions attached to it because this was a house which was built by my grandfather, and then my father lived it. I took birth in this house and got married and all that. So I'll not sell it off. Such sort of investors are called emotional investors. Then there are informed investors. These informed investors tend to make a well rounded approach. They are careful to stay up to date, using a variety of sources to fill in their understanding while confident of their own financial acumen. They also are willing to listen to the advice of experts and to act decisively. The informed investors normally are they can also be called technical investors, because they look at investments and all that technically. They do a lot of research and technical analysis of any stock before investing into it. They study a lot. They study the financials, past and present, as well as they see the future of prospects of that particular stock in which they're going to invest. They do the technical analysis of the stock before investing into it, and they're shrewd, and they also not only believe in their own acumen, they also try and take advice from the experts before investing. Often high achievers in their professional lives, they typically have a strong work ethic and may seek the same sense of control and accomplishment in their investments. These are normally professional investors, and who are, while in their job or in their employment or in their business, while they were professional in their dealing and all that, they same sort of thing they look at or they look for even in their investments, and that is why they are known as professional investors or technical or informed investors. Then technical investors are also share some characteristics with busy investors, but they tend to analyze the numbers and read the pundits rather than reacting to every market move. They may spend a lot of time on their computer screens but feel that their diligence is rewarded if they spot a trend earlier than others. They are so technical that they would always be clung to the uh, trends. They would look for a particular trend, whether it is upward trend, lower downward trend, or static trend, and all that. And within how much time the trend is changing, and if a trend is outbeating the expectation of the market, or the performance of the stock and all that, they would do so much of technicalities on that they are typically known as technical investors, because their investments are all influenced by technicalities and a stock. Their desire to get an edge on the markets often leads them to buy the latest technology. These active investors are very involved with the management and choice of their investments. You see, investors in context of startups. Nowadays, the startup is a buzzword. When the for in case of startup, there are different type of investors. These are broadly family, friends, and relatives, angel investors, venture capitalists, and private equity investors. Now, family, friends, and relatives, all of you understand that initial stage when you have a new idea, a startup, you're going to start a new startup and you have a new idea, nobody will come forward and give you or risk his money with you. It is only your very close relative, your parents, your relatives, your friends, those who believe in you and believe in your capacities or in your acumen and knowledge, they only will come forward and give this money to you, which is known as seed capital. Then once you have started the startup, you have initiated it, Then the next type of investor comes, that is called angel investor. And angel investors are wealthy individuals who provide capital to help entrepreneurs and small businesses succeed. They are known as angels because they often invest in risky, unproven business ventures for which other sources of funds such as banks, loans, and formal venture capitals are not available. They come to you as an angel because you see, as an angel, when in during your childhood, you all know परियों की कहानी सुनते थे and all that. The angel will come and will shower the best on you and all that. So they just come like that. That in case of your need, when you are trying to stand up but are limping, they will just simply hold your hand. They will come to your rescue. They will put in their investments and guide you also. The other term for them is entrepreneur in residence, that they would be a partner hand in glove with you as well as an investor in you. They would take equity in your business and they would guide you from time to time to let you stand and grow further. They are called angel investors or entrepreneur in residence, EIR. Unlike a venture capital firm that uses an investment fund, angels use their own net worth. You see, angels are those who have earned enough of money or who have grown big and earned so much of money that now they want to invest and let others grow further in their business to help them out. Angel investors usually give support to startups at the initial moments and when most investors are not prepared to back them. That is why they are known as angel investors. An angel investor, also known as a private investor, seed investor, or angel funder, is a high net worth individual who provides financial backing for small startups or entrepreneurs, typically in exchange for ownership equity in the company. Often, angel investors are found among an entrepreneur's family and friends. Venture capitalist is a private equity investor who provides capital to companies with high growth potential in exchange for an entity's stake. The, this could be funding startup ventures or supporting small companies that have been deemed to have high growth potential or which have demonstrated high growth but do not have access to equities market. They generally take position in the board's management and have great influence in crucial decision making. They generally help the companies in which they have invested to attract good skills and in marketing as well. Private equity investors. Private equity is an alternate investment class and consists of capital that is not listed on a public exchange. Private equity is composed of funds and investors that directly invest in private companies or their engages in buyouts of public companies, resulting in the delisting of public equity. Private equity refers to investments in company shares that are not publicly listed. The investment capital is provided by individuals or firms with a high net worth. Generally, private equity firms take control of a public company which they will later take private by delisting company shares from all stock exchanges. Thank you.
कैनवास में रंग भरकर उसे जीवित बना देना एक कला कहलाती है। इसी तरह अपनी जमा पूंजी बढ़ाकर जिंदगी बना लेना भी एक कला ही है। मैंने भी ये स्टूडियो ऐसे ही बनाया है, पाई पाई जमा करके। मुझे भी लोग फ़ोन करते हैं, मेल करते हैं, मुझे कन्विंस करते हैं कि उनकी इन्वेस्टमेंट स्कीम्स बहुत अच्छी है। उन लोगों के भी रेफरेंसेस देते हैं जिन्हें फ़ायदा हुआ है, पर मैं अपनी रिसर्च खुद करती हूँ। आपको भी यही करना चाहिए। सरकार के कुछ वेबसाइट्स हैं जिन पर जाकर आप अपने निवेश से संबंधित पूरी जानकारी ले सकते हैं, और ये वेबसाइट्स हैं मैं अपने पैसों को लेकर सावधान रहती हूँ, आप भी रहिए।
IEPF अथॉरिटी द्वारा जनहित में जारी।
क्रिटिकल है बट वी आर ट्राइंग।
ये सब हुआ कैसे?
एक फोन आया था राजेश के पास। उसने कहा कि उनकी 1 करोड़ की लॉटरी निकली है और उसके लिए उसने बैंक डिटेल्स मांगी। राजेश ने सारी डिटेल्स दे दी। 1 घंटे के अंदर ही उनके बैंक अकाउंट से सारा पैसा साफ हो गया और वो यहाँ आ गए। हार्ट अटैक आया है।
देखा आपने, आपकी जरा सी असावधानी क्या कर सकती है। डिजिटल फ्रॉड करने वालों से सावधान रहें। अपनी बैंक डिटेल्स, अपना डेबिट या क्रेडिट कार्ड नंबर, एक्सपायरी डेट, CVV, OTP, पिन कभी किसी को ना बताएं। सावधान रहें, समझदार बने।
IEPF अथॉरिटी द्वारा जनहित में जारी।
हाँ जी सुरेश जी, रिटायरमेंट के बाद जो प्रोविडेंट फंड आएगा उसका क्या करेंगे?
कुछ खास प्लान नहीं है, पड़ा रहेगा बैंक में, ब्याज आता रहेगा और क्या।
सुरेश जी, बैंक से कितना ब्याज आएगा? एक नई स्कीम बताता हूँ, उसमें पैसे लगा दो, साल भर में दुगने बल्कि चौगुना हो जाएगा। हाँ, बस कुछ नए मेंबर्स बनाने।
नहीं सुरेश जी, इन सब फालतू चक्करों में मत पड़िए कि नए मेंबर बनाना, रातों रात करोड़पति बनाना, ऐसे सपने दिखाने वाली स्कीम से बचकर रहें। आप लालच में आकर नहीं, समझदारी से निवेश करें। नए मेंबर बनाओ, वर्ल्ड टूर पे जाओ, कमीशन पाओ या उपहार घर ले जाओ। ऐसे सपने दिखाने वाली स्कीम से बचकर रहें। ऐसी स्कीम्स धोखा हो सकती हैं।
IEPF अथॉरिटी कॉर्पोरेट कार्य मंत्रालय द्वारा जनहित में जारी।
यार वो मेरे बचपन का दोस्त है, वो क्यों मुझसे झूठ कहने लगा? वो कह रहा था इस स्कीम में पैसा लगाने पर 6 महीने में 10 के 20,000 हो जाएंगे।
और तूने मान लिया?
ऐसा ऑफर कौन छोड़ता है? 10,000 के 20,000।
एक काम कर, ये ले 100 रुपये पकड़ना और जाके 10 किलो लड्डू लेके आ।
अबे पागल है क्या? 100 रुपए में 10 किलो लड्डू आते हैं? अबे इसके तो 1 किलो लड्डू भी नहीं आएंगे।
जब इतना जानता है तो ये नहीं जानता कि 6 महीने में 10,000 के 20,000 नहीं होते। समझदारी बढ़ा, लालच नहीं।
लालच में न आए, समझदारी बढ़ाएं। IEPF अथॉरिटी द्वारा जनहित में जारी।
कैनवास में रंग भरकर उसे जीवित बना देना एक कला कहलाती है। इसी तरह अपनी जमा पूंजी बढ़ाकर जिंदगी बना लेना भी एक कला ही है। मैंने भी ये स्टूडियो ऐसे ही बनाया है, पाई पाई जमा करके। मुझे भी लोग फ़ोन करते हैं, मेल करते हैं, मुझे कन्विंस करते हैं कि उनकी इन्वेस्टमेंट स्कीम्स बहुत अच्छी है। उन लोगों के भी रेफरेंसेस देते हैं जिन्हें फ़ायदा हुआ है, पर मैं अपनी रिसर्च खुद करती हूँ। आपको भी यही करना चाहिए। सरकार के कुछ वेबसाइट्स हैं जिन पर जाकर आप अपने निवेश से संबंधित पूरी जानकारी ले सकते हैं, और ये वेबसाइट्स हैं मैं अपने पैसों को लेकर सावधान रहती हूँ, आप भी रहिए।
IEPF अथॉरिटी द्वारा जनहित में जारी।
Are you a fresh graduate? Do you want to fulfill your educational aspiration by pursuing higher education in various interdisciplinary and multidisciplinary areas like environmental science, environment and occupational health, philosophy, sustainability science, folklore and culture studies? If yes, the School of Interdisciplinary and Transdisciplinary Studies offers various programs like Master's Program, Graduate Program, Postgraduate Diploma, Certificate and Appreciation Program. The school offers 5 Master's Programs. Master of Science, Environmental Science. The eligibility criteria for MSc Environmental Science is Graduate in Science, BTech, BE, Agriculture Graduate, Forestry Graduate and Veterinary Graduate. School also offers Masters in Environment and Occupational Health, Masters in Sustainability Science, Masters in Philosophy and Masters in Folklore and Culture Studies. The eligibility criteria for these 4 Masters program is graduate in any discipline. School also offers various socially relevant and need-based PG Diploma program like PG Diploma in Sustainability Science, PG Diploma in Environment and Occupational Health, PG Diploma in Folklore and Culture Studies and PG Diploma in Migration and Diaspora Studies. The school also offers PG Certificate in Climate Change and Avshist Prabandhan mein Praman Patra. The school also offers 2 doctoral programs, PhD in Environmental Science and PhD in Interdisciplinary and Transdisciplinary Studies. The school offers various innovative technologies and multimedia for providing a very excellent student support system. The study material is of high quality. The learner support is provided through Gyan Darshan, Gyan Vani, IRC, Swayam Prabha and Swayam channel of IGNOU. For more detail, please log in to IGNOU website. For online admission in these programs, visit school site and also the Samarth online education portal of IGNOU. So please join these programs and fulfill your educational aspiration.
Hello viewers, I, Urshila Kant, Assistant Professor from School of Vocational Education and Training, welcome you all to this session of Master of Science and PG Diploma in Information Security. As you know, term and theory exams are going on and we are receiving so many queries on this course MSEI 026, that is BCP DR Planning and Audit. Therefore, today we are going to cover the Unit 1, Maintaining and Administering BCM Plans of Block 4, BCM Program Management, of this MSCI 026 course. This course emphasizes on the importance of business continuity and disaster recovery, that is DR planning. It helps in the understanding of the information infrastructure, which is mainly affected by dangerous risks, threats, and vulnerabilities to disasters of various kinds, which the organization must contend with to maintain its leadership position. This course are having 4 blocks. The fourth block consists of 4 units. Unit 1 is maintaining and administering BCM plans. Unit 2 is auditing and evaluating BCM plans. Unit 3 is developing and implementing a BCM response. And the fourth unit is disaster simulation exercise. Today we have with us Professor A.K. Gaba. He is Program Coordinator from School of Vocational Education and Training. I welcome you, sir. And now I request to please tell us about the unit maintaining and administering BCM plans.
Thank you, Ushla ji. I also join her for welcoming all of you where you are at the moment and viewing this program. पर इससे पहले कि हम इस स्पेसिफिक सेशन की बात करें, मैं उन व्यूअर्स के लिए एक जानकारी देना चाहूँगा जो इस प्रोग्राम में जो रजिस्ट्रेशन लेना चाहते हैं और इस प्रोग्राम में नहीं, स्कूल ऑफ वोकेशनल एजुकेशन एंड ट्रेनिंग इंदिरा गांधी राष्ट्रीय मुक्त विश्वविद्यालय काफ़ी स्किल बेस्ड प्रोग्राम ऑफ़र करने जा रहा है और ऑलरेडी जो सर्टिफिकेट से लेके डिग्री पीएचडी तक हमारे जो प्रोग्राम ऑन ऑफ़र हैं उसकी लिस्ट हमारे इग्नो वेब पेज पे अवेलेबल है। फिर भी मैं उन लोगों के लिए जानकारी देना चाह रहा हूँ जो फ्रेश एडमिशन लेना चाहते हैं हमारे स्किल बेस्ड प्रोग्राम के लिए। जो आज का विषय है वो है मास्टर लेवल प्रोग्राम, दैट इज़ इंफॉर्मेशन सिक्योरिटी प्रोग्राम, जिसका एडमिशन अभी ऑन है। इसी तरह से एक एमए इन एंटरप्रेन्योरशिप प्रोग्राम है जो पीजी लेवल पे ऑफ़र किया जा रहा है, उसका भी एडमिशन ओपन है। और थर्ड, वो वेरी इंपॉर्टेंट प्रोग्राम, दो स्टूडेंट्स जो डिग्री करना चाहते हैं वोकेशनल एजुकेशन प्रोग्राम में, उनके लिए एक बहुत ही इनोवेटिव प्रोग्राम स्टार्ट किया है, बीए इन स्मॉल एंड मीडियम एंटरप्राइजेस। और ये इनोवेटिव प्रोग्राम्स आपकी एम्प्लॉयबिलिटी पर्सपेक्टिव को काफ़ी इन्हेंस करता है। सो ये 3 प्रोग्राम डिग्री लेवल जो हैं ऑफ़र किए जा रहे हैं और मैं उनके लिए जानकारी देना चाहूँगा उन स्टूडेंट्स के लिए जो इंटरेस्टेड हैं इन प्रोग्राम के लिए। कहीं भी देश के कोने में बैठे हुए हमारे इग्नो वेब पेज और या रीजनल सेंटर को कांटेक्ट करिए और रजिस्ट्रेशन का ऑनलाइन आप फॉर्म भर सकते हैं। इसके अलावा हमारे पास सर्टिफिकेट डिप्लोमा है कम्युनिकेशन आईटी स्किल्स से रिलेटेड, फैशन डिज़ाइन से रिलेटेड, और हमारे इंफॉर्मेशन सिक्योरिटी लेवल के सर्टिफिकेट प्रोग्राम्स हैं और डिप्लोमा लेवल पे भी प्रोग्राम, पीजी लेवल के प्रोग्राम जो हैं वो भी अकाउंटिंग एंड मॉडर्न ऑफिस प्रैक्टिस से ऑफ़र किए जा रहे हैं। आज का जो विषय है जो डॉक्टर उर्शिला ने अभी आपको ब्रीफ किया है कि उन स्टूडेंट्स के लिए जो ऑलरेडी रजिस्टर्ड हैं इस प्रोग्राम के लिए और उनका अभी एग्ज़ामिनेशन भी जो है शुरू हो चुका है और नेक्स्ट वीक वो इस एग्ज़ाम देने जा रहे हैं इस कोर्स के लिए। देयर आर सो मेनी क्वेरीज एंड रिक्वेस्ट फ्रॉम द लर्नर्स, they want to be focus more discussion on this particular unit, that is maintaining and administering BCM plans. ये एक ऐसा यूनिट क्रिएटिविटी है कि सर ये बिजनेस लेवल पे सिक्योरिटी थ्रेट इश्यूज और वल्नरेबिलिटीज़ के बारे में वट एवर वी आर डिस्कसिंग, व्हाट इज़ दैट? As this is first unit of block 4, what my colleague just brief about all of you, we are discussing the whole structure first, what we have covered. Then I will explain the basic conceptual framework of BCM and its importance to tackle threat issues. That is basically there. And the course structure, those students, those who are preparing their examination, and I know all the students are in touch with the study materials and they have already attended classes, counseling sessions at respective study center, regional center or various platforms. They are well aware about this unit structure because they have some resources available with them. The purpose for highlighting this detail is, some of the students, those attempted our assignments, they asked to explain the basic strategy, BCM strategy, which text is explaining is not able to clarification given by the respective counselors and so on. So we discuss this matter within school and come out this topic special session, that is maintaining and administrating BCM plans, and then services and producers and other details what we have highlighted, developing and implementing BCM's responses and so on. So let me explain the first basic conceptual framework. What is BCM? Business Continuity Management Plans.
Right.
And when we're discussing these plans, why should we need this? When we have this course is MSc Information Security Program, and where is the threat issues? Industry is facing a lot of threat issues, and at any time. And if you see COVID-19 situation, is recently we have experiences, industry experiences we have, and how the production supply chain suffered, and what are the threats industry faced. So coming to this conclusion, we come out ki as a learner, after attending this session or reading study material, whatever you received from the School of Vocational Education and Training, that is, you will be able to know that organization, productivity and prepared and respond to unplanned events. Some of the unplanned events, because we planned 1 year strategy, we develop these particular productions and we supply in this part of the country, but all of a sudden COVID situation come out, so all plan disturbed. So this threat issue, how to handle it. Second, you will be able to assess the business processes that BCM plan it needs to reach out to man or made or natural disruptive events. It is not necessarily natural events what COVID we have. Sometimes man created problems are strikes in industry and technical skill manpower is not available, production stock.
That is more hazardous.
More hazardous. So that's why we come out to see the learner after attending this particular session will be able to protect the organization in DR and assess the risk. And after assessing the risk, how to tackle maybe safeguards, conditions and information while maintaining continue operations, enable virtuality, complete recovery, and these are the issue we covered in this particular unit that is called maintaining and administrating BCM plans. Now coming to this first aspects, that is DCM. What do you mean by BCM? Learners, those who are asking questions, sir, ये तो ठीक है, आपने बिजनेस कंटिन्यूटी मैनेजमेंट की बात की, इसमें वो कौन कौन सी स्टेजेस हैं, क्या क्या रिस्क फैक्टर्स हैं जो हम इस इंफॉर्मेशन सिक्योरिटी के थ्रू उस रिस्क को कवर कर सकते हैं. सो वी कम आउट फर्स्ट लेट अस एक्सप्लेन द conceptual framework to them, because most of the students, those who are not having this background of commerce or economics, they are coming to straightforward mathematical science students and they are studying this particular concept where we explain them the business community's requirement. What is business continuity requirement is required? BCM is there, so the business could not be suffered at any stage. So that requirement is, it is a company-wide approach designated to ensure that critical businesses functions can be maintained or restored as quickly as possible in the event of internal or external incidents. Sometimes kind of unforeseen circumstances industry is facing, and that fire is there or employee went on strikes, and then this is man-made created problems in industry. So one of the aim to BCM is to therefore to minimize the financial, legal and reputational impact of such incidents. That is the basic goal what this BCM role is there. So every industry and every organizations have a team of this BCM at the respective organizations who looks after this all situation as and when arises at their respective organizations and industry concerned. Now coming to business, this continuity requirement is concerned, it is intended to ensure the continuation or rapid recovery business in crisis situation. The basic goal is कि when crisis comes at the respective industry, how to recover it. That is the basic goal as quickly as possible, because a lot of cost recovery measures and financial loss, and then the production surplus is there, how to transport, so many factors and situations comes. This team management, it's like work as like a company, as I said. As a like company function within a company, sub company working, it is called BCM. Now a business impact analysis to be carried out immediately to identify the business critical resources and processes. That will include defining appropriate recovery times and availabilities. That is a major concern to all of us. Now, how this information security or measures will help them to recover that. The last point is this is a form the basis for business continuity plans. How to plan business continuity plan, that is the strategy we explain. This unit also refer to define the inspect of preparatory measures, that is checklist and work tools that should be prepared available at any time. And we have noticed in some of the industries perspective and projects reports, they are already explained their strategy plans and come out to for the timely and correct recovery of business activities, so that business should not stop, it should continue as much quickly as possible. So let me conclude the process, that is business continuity process, that is called is a standard management process in many large organizations and government across the world. It is not only necessary the situation come in a government sector or business sector alone, it comes any situations. So everybody should have this business continuity plan strategy ready to implement as and when situation arises. अब कहीं इंडिविजुअल पर्सपेक्टिव में एग्जांपल देता हूँ. अब एक रेजिडेंशियल एरिया में हम रह रहे हैं और अचानक किसी क्राइसिस में वो बिल्डिंग की स्ट्रक्चर जो है अर्थक्वेक के बाद थोड़ा उसका वीक हो जाता है बैकबोन. सो रेजिडेंट हु आर स्टेइंग दैट बिल्डिंग आर वेरी वेरी कंसर्न्ड एंड इनसिक्योर. फॉर दैट टू टैकल सिचुएशंस, so that management of the particular residential area, a colony, has a BCM and Action Society team or which develop this strategy and implement immediately with the help of all the stakeholders. Similarly, in the industry or any organizations or private or public sectors, government institutions, they have a team and they tackle this. They should have a plan, business continuity plan and strategy how to tackle. So this unit is.
तो हम ये कहना चाह रहे हैं कि ये जैसे टीम वर्क.
It's a teamwork. This teamwork is working for specific purpose. They are having expertise to take decisions immediately in the context, so that the work which they are doing, what institutions are working, it should not suffer much. For instance, in ODL framework, for additional learning materials, बच्चे जो हमारे इस प्रोग्राम को देख रहे हैं उनको स्टडी मटेरियल्स लेट मिला कोविड की वजह से. सो आवर यूनिवर्सिटी टुक वेरी सीरियस स्टेप्स to find out so that solutions कि every students where they are staying they can get the study material in time. Through content tabs, through hard copies, through soft copies. So we approach blended approaches. Every learner as sitting at any regions during Corona, they get study material in time. They may be having this process called important process for the organization for the economy implementation, because अल्टीमेटली गोल इज हमारा ये है कि कोई भी एक्टिविटी, इकोनॉमिक एक्टिविटी, नॉन इकोनॉमिक एक्टिविटी शुड नॉट बी स्टॉप्ड, एंड इट ऑल डिपेंड्स अपॉन द हेल्थ ऑफ दिस दैट ऑर्गेनाइजेशंस एज वेल एज एट द नेशनल एंड स्टेट लेवल. So the maintenance and administrative process of a BCM is a very, very patchy, and many organizations that claim to have implemented BCM do not ensure that their business continuity capability is either up to date or effective. It should be worked out and it should be revised quickly as and when situations arises, and the team should be taken decisions for implementation for the false recovery of that particular BCM process. If you see this diagram which we have shown on screen, the business continuity framework after conceptual framework is concerned, and I am giving you this which we have explained very well in our study materials, that is plan, how to plan this activity. We have given this software for instance ICT based and information security concern, any industry working that, accepting data loss. Data loss is a very, very serious issue. When they don't have data, how to plan? So data importance is there in while making BCM framework. Second is this semantics, and this particular framework what we explain, it all are technical perspective of information, software, hardware, framework, database, and their IT team. It is not only the technical expert, it is required legal expert team, technical expert and financial team. In group of these teams have been formed to start this business continuity management team, which has been explained very nicely by an expert in this unit, and this graphic is giving a clear-cut example for our framework how it has been elaborated. The most important point, if I would like to see the process, conceptual framework, then is framework of business continuity management, how it work. For instance, if you see the business operations, how to operate any industry, public, private, I am explaining again and again. First, we have to see the impact analysis and risk assessment. That is very important. And business continuity strategy, second point, should be focused as unit explain in detail. And all learners have gone through this, but they were not able to understand the BCM process, how to, I think after discussing today, they will be able to explain nicely this BCM process work like this, and coming to exercise and testing, where we failure. For instance, some software failure is there. Some hacker has taken this particular data and they want to use in their own context in industry. So how to save this, how to protect this information from our competitor in the business, that explain. And business continuity procedures, we have explained these steps. In this way, this BCM process, there's one more question which we have received, the development and implementation of a BCM process, which part of our industry focus. For them, let me explain. If you see the scene, we have to define first the scope of BCM. What are the natures and responsibilities?
What are the areas?
Areas they have to do. Second part, they have to see the anchoring of BCM in the corporate organizations. Because every corporate having their own size, their own priority, vision, mission document, and their purpose for establishment of that corporate. They have to go through that team and then come out. This because BCM should have to focus in the mind of the context of the industry goals and objectives. Now, third part is the definitions of crisis scenarios and their impact on the company's resources. But you are making plan, but you are not aware what type of resources we have in a company. So this team should first have a major knowledge and awareness and information on the company's, organizations or industry resources, and on the basis of the availability of resources, they have to implement plans while this crisis situation. In this way, this development and implementation of a BCM process focus. And the last point is to identify by means of a business impact analysis, because whatever we are doing, this planning and or the purpose is to sort out the problems what industry is facing at their respective organizations due to unforeseen circumstances or crisis arises due to various reasons. So let me explain the basic concept again. The focus is should not be on that particular resources, the 4th point what we discussed, but also defining the business continuity strategy for the fundamental approach to dealing with losses of individual businesses architecture resources, because every industry and all are having their own size and their own infrastructure strength, and that should be worked out by the BCM team. आई थिंक एक पॉइंट उस्ता जी आपने एक्सप्लेन किया था स्टार्टिंग में कि ये यूनिट ब्लॉक 4 का है. इससे इस आई एम श्योर द व्यूअर्स और लर्नर्स दो जो आर वाचिंग दिस प्रोग्राम व्यू दिस प्रोग्राम्स they are well versed about the first 3 blocks and they are, because we have
already discussed in the previous sessions
also. So this particular session they faced problem because of having this technical some words we used for this particular because this is very important units which we are discussing today, and through discussions and through our this presentation of basic conceptual framework, learners are very much aware now the basic concept and framework and process. They are one of the questions what they raised, sir, is the framework of this BCM are getting problem, we are unable to understand that. I think the previous graph जो हमने explain किया है, we explain the basic with illustration example giving ODL what we have in our case, and earthquake situations or our COVID case, and there are so many man-made or natural climate come which has been, this team has to look after that. Now coming to the major point what we discuss in the process is first they should also focus on the business continuity test. How to this test? The next question is, I think second unit we are discussing detail of this particular block, and that you have also highlighted this particular course introductions when we explain threats and hacking. And threats and hacking, business industry whatever when they have enterprises having basic concern of threat and hacking of their personal data. So we explain this particular case in these slides and how to report communication and training. We should also be, I think, in a month or 6 month or quarterly. It all depends upon the company industry policy. As and when they have a availability of the resources and a BCM team, they should also training to other staff how what to do and how to save these business activities instructions due to various reasons. So to keep business running around the clock, around the world, that is the basic goal and focus of this business continuity team. And to keep business running through disasters and maintaining cycle is a major concern by every industry in every situations. So let me conclude this focus area. Key major team focus should be to operate recovery application availability. So if you are working in IT industry, you should have a well developed softwares where they can tackle the situations. A lot of software company developing, there are all respective organizations where they can save data there are, so that this continuity process of their business activity should not stop. And third, how to tackle the situation, then non-natural climate situation, how to maintain and say then the role of inter-server intranet is coming up very crucial. Well, we have explained all this issue in this particular unit, and the unit focusing on the keep business application up and running. The software should also be updated from to time,
Right.
as and when the need required. So coming to the basic issue, what we have basic concept framework we discuss, the application and data restore. If climate is come and internet is not working, and how to restore data and application, that is a basic challenge is industry is facing, and we have explained this graph in our study material also as well for learners convenience learning. And then come the data is local. When you are working in a company or industry, data is stored your own monitors and hard disk or any database server or disk, and then remote areas. So this graph is there talking about the storage, switch and server protection is very much. We as this unit discuss and suggest कि if you are working as a information security expert in your own respective organization and you helping a team of business continuity management, your first job is to server, how to protect server from this threat. That is very important. Second, backup and how to back up data. There are so many software as people are well aware. I will not take much time on that because we have less time. And then how to recover data, quick, accurate and predictive recovery. That is in local level and spot remote level. You have to critical data safe and remote located because the technology is digital era is changing very fast. Lot of developments are there and remote data, cloud data, they are server now have. We have explained these slides.
These steps are well explained in our study material.
Study material also, so I will not take much time. But the point the learners are asking the how to protect application and data restore issue and data how to recover data also explain. Now disaster recovery planning, that is also this point discussed in this unit. Risk and threats and then determining the risk factors. How to explain this first risk threats, that is survivor a disaster or achieve high availability and prevent data corruption because there is also manipulated and data to be hijacked by hacker and do parallel processing. And coming to the more and migrate data, that is also very important. And data, how much data? If you see 130 billion we are collecting the information of any individual on the world, so it is not possible to have a manual data collection techniques, and most of the independent researchers are using their internet and other softwares to collect the data, and then how to contain cost. These are the factors which we have to see. And coming to these risk threats, while applying BCM on IT segments, what we are discussing.
Yeah, what are the risks involved?
Risk involved. So send mail buffer overflow, that is the case we explained. A unit also discussed by the global file sharing procedures, and so that data in one place to be stored and to be saved. Now these days I think cloud data is there and global server or local server, so many platforms are there, and then virus and worms and human imply storage is concerned, and I think artificial intelligence will cover this issue and come out the last point, that is hackers roles and powers outage infrastructure issue. This unit also discuss about the hardware and software failure issue. सो ओवरऑल जो बच्चे इस यूनिट को पढ़ रहे हैं एग्ज़ाम के लिए और जिन्होंने असाइनमेंट भी सबमिट की है and they should not be worried about. We have taken care of most of the students. I think joined and attempted very nicely, but somewhere where they face problem, we explain in this particular graph, that is determining risk factors. If you see the determining risk factors, that is only we discuss 2 points in our slides, and that is risk factor and determining risk factors. So determining risk factors, you have to strategy and vision when you are having the risk to be storage, and then organization structure, employee size and financial health, and then third the process how to recover this failure of data recovery and technology and facilities. So in view of that, I summarize the determining risk factors include 3 perspectives. First is data driven risk, that is there. Second, business driven risk, and third, event driven risk. If put together 3, it will affect our determining the risk factor. And this is not only the particular industry or every organizations, what they are doing, how they are saving this data in the context of and what type of risk they can face, we explain in this particular graph. I am sure learners will be happy to read again if they go and study this unit again, and still they are facing any query, you are most welcome, you can mail to us. Let me summarize the 3 perspective what we explained in the previous slides, that is BCM strategy. What are the BCM strategy? It will help to determining outputs and delivery services and product. Then at call center also this risk is there. And third, electronic commercial and internet strategy. These are the basic conceptual framework we explain in this unit, and unit also discuss implementing BCM response, how to respond in the BCM. BCM team is working, and climate and COVID has come out, or data failure is there. So how to respond to this? So that strategy we have explained, and BCM awareness and training we have given the implied, we discussed it. So quickly I would like to come out the last point, that is monitoring DRP teams, that is backup and restoring critical data. Every learner, those who are doing this program, they are almost doing their day-to-day life where they are storing their data in respective different forms, because well versed. But some of the students, those who are not having this technical background for them, we explained the steps in this particular unit. So internet security concern around, and third is maintaining and administering BCM plans. This is the last and very important points. I think we covered all most important points in this particular session, and we bind up this particular last slides with showing the BCM plan strategy and distribution, how the BCM work. Now come to the basic conceptual framework we explained. The business continuity team function like recovery teams is there. Every subheads, as I said just in the beginning of this sessions, key every business continuity plan have working as like a company. So this company is having the sub teams, and these slides show all these storage functions and recovery different department and divisions, the organizations. So let me brief before ending this session, that is to maintain testing and to maintain the business committee plan and review and address BCM policies. I am sure you have already took an enjoyment of this particular session. Still query, most welcome to mail to us.
Thank you so much, sir. You have explained so very nicely. Thank you so much.
Thank you.
We wear clothes on a daily basis. But have we ever wondered, where do our clothes come from? Who makes our clothing? And who are the people and the process responsible for the whole manufacturing of our clothing? If you want to know more about this, Indira Gandhi National Open University from the School of Continuing Education has launched a program which is Certificate in Apparel Merchandising. There are many benefits after doing this program. You can become a designer in various fields. It can be fashion designer, apparel designer, costume designer, or even a textile designer. One can also work as a fashion consultant. Research and development is another field which one can take up after doing this certificate course. Going into academics is another perk after doing this program. Getting into fashion houses or fashion studios as an intern is also a very good option post doing the certificate in apparel merchandising. The basic eligibility of the program is 10+2. The duration of the program is 6 months to 2 years. The program is also available for both the admission cycles, which is July and January. The exams are conducted twice a year, in June and December. So what are you waiting for? Join this program and get an enriching knowledge in the field of apparel merchandising. And to do so, you can log on to the official website of the university, www.ignou.ac.in.
Hello learners, welcome to teleconferencing session. In this session, we are going to discuss about BPAG 171, that is disaster management course. In that, we are going to discuss about the meaning and classification of disaster. In that, we are going to discuss about what is disaster management and what is the meaning of disaster and various definitions of disaster and how to what are the various classification of disaster and all. In this session we are going to discuss about. As you all know about that, disasters are not a new thing. Okay, disasters are not a new thing. Disaster has been with us as long as recorded history, as probably even longer. We know that our forefather has suffered here also before. When the human being has started living together, or the civilization started, the disasters are continuing continuously. Okay, our ancestor had to withstand disaster. They have suffered the consequences and recovered from them, and the life also continued. Most of the world problem remain as threatening as ever. So after disaster, it's not going to stop anywhere. The life has been continued. Like if you, for example, if you take natural phenomena such as like earthquakes, cyclones, volcanic eruptions, tsunamis, wildfires, floods, landslide, and drought still persist. So, do man-made disasters such as major accident like man-made disaster also still persist. So, these disasters continue to cause human casualties, economic and social loss, and damage to the environment. That is the most important thing. Normally, what will the disaster do? This disaster will continue to cause human casualties, economic and social loss, and damage to the environment. So, before moving into that, first we will discuss about what is the meaning of disaster. The word disaster, the origin of the word disaster is from the French word that is called désastre. It means dis means bad and astre means star. So it means like a bad star. Like for example, if you take that like 20 to 30 years before or 15 or somewhere, okay, whatever it is, before that in olden days, we used to say that like for example, if anything happened like earthquake, cyclone or flood or whatever landslide happened, we used to say it's a bad star, or we used to say about that we have done some injustice. So these kind of things open. But nowadays the term disaster commonly used to denote any odd event, whether it is a natural or man-made, which brings about immense misery to a region so that it becomes difficult to cope with the situation through local resources. For example, if you take that, now we are in the last few years, last 2 years, we are suffering from the COVID and something. So these also come under the disaster only. So whether it is a natural, either it's a man-made, but it used to bring immense misery to a region so that it becomes very difficult to cope up with the situation through the local resources. So it is a meaning of disaster. Now we are moving into the definitions of disaster. Definitions of disaster. Disaster Management Act 2005 has explained very well. In that, they said that disaster means catastrophe, mishap, calamity, or grave occurrence in any area, are arising from natural or man-made causes, or by accident or negligence by in which result in substantial loss of life or human suffering or damage to and destruction of property or damage to degradation of environment, and if such a nature or magnitude as to be beyond the coping capacity of the community of the affected area. For example, disaster means if there it is a catastrophe, it is a mishap, it is a calamity, or any grave occurrence. It may happen through natural or man-made disaster. Natural means it may be earthquake, cyclone, floods. If it is a man-made disaster management means you can say that it's chemical disaster, biological disaster, or so on, and our accident. So what will happen? This will bring the substantial loss of life or human suffering or damage to destruction of property and degradation of environment. So these are the things used to happen. So what used to happen when disaster affects, it used to affect the, or you can say that it is the beyond coping capacity of the community of the affected area. So another definition is like International Federation of the Red Cross and Red Crescent Society says that a disaster is a sudden, a calamitous event. Okay, it is a sudden event. It's not, it's not happened like you can't predict. Okay, you can predict some disasters like a cyclone or something, but you can't predict all the disaster. So disaster is a sudden calamitous event that seriously disturbs the functioning of the community or society, or it causes human, material and economic and environment losses that exceeds the community or society's ability to cope using its own resources. This is what, whenever the crisis comes, whenever the problem comes, it's very difficult to whether the community or society, it's very difficult to cope using its own resources. They have to wait for the others' help only. So a disaster occurs when a hazard impacts vulnerable people. That's what, like this, what is the disaster and hazard, we will see in the future session. Now we are in this session, we will particularly stick into that meaning of disasters only. So far we have seen about the, meaning of disaster and the definition of disaster. In that we can understand that disasters are serious disruptions of the functioning of a society. It's causing widespread human and material or environment losses which exceed the ability of the affected people to cope using its own resources. That's what all the definition used to say continuously, and we are the generation and we are the people, we know that how that COVID has affected our normal life and our coping, our livelihood. It has affected so much, so we know about what is the meaning of disaster also. So if you look into that, what are the related impact of the disaster? Okay, it affects the normal pattern of life, loss of life and property, adverse impact on economic and social infrastructure, disruption on community needs of the shelter, food, clothing and medical help, and onset psychological drama, loss of livelihood, disruption of communication, transport and infrastructure, law and order problem, epistemological threat, migration, both whether it is a short-term migration, whether it is a long-term migration. So these are the continuous effect based upon the disaster only. So some people used to say sometime what will happen, disaster used to bring the positive and the negative effects also. Like you can see that in the COVID situation, the school has been closed. Now they have found out the alternative mechanism. So online education and the implication of ICT tools to implement everything. So many new things has happened. So it always bring about the positive and the negative effect. Like for example, aspects in the disaster word, D denotes the damage in the negative aspect. In the positive aspect, it denotes the development. So what do you mean by damage to development? So whatever had happened, it has been reconstructed by the government or the NGO or the people by own, or they used to get the new infrastructure. And I denotes interruption, it may innovation. S means severe, it means sharing. A means antagonist, it means awareness. Courage means and self-sufficiency. It may be a trauma to transformation. It's an emergency to education, risk and to resilience. So now everyone knows about the awareness, like due to the medias and all so forth thing. These are the things are negative and positive aspects of disaster. Now we are moving into the what are the types of disaster. The High Power Committee of Disaster, they have classified disaster into 5 categories. That one is water and climate related disaster. So what are the water related disasters? Flood, cyclones, tornadoes, hurricanes, hailstorm, cloud burst, heat wave, cold wave, snow avalanches, droughts, soil erosion, thunder and lightning, and tsunami. So these are the come under the water and climate related disaster. And another one is that geologically related disaster. Geologically related disaster means landslides and mud flows, earthquakes, dam failures and dam burst. Okay, and third one is that chemical, industrial, nuclear related disaster. In that you can say that chemical and industrial disaster, nuclear disaster, these are the things are there. And another one is the accident related disaster. So what do you mean by accident related disasters? For example, forest fire, urban fire, mine fires, mine flooding, oil spill, major building collapse, serial bomb blast, festival related disaster, electrical disasters and fires, boat capsizing and village fire. So these are the command the accident related. And the final one is the biological disaster. Biological disaster is like, for example, biological hazards, epidemics, pest attacks, cattle epidemics and food poisoning. So these are the 5 categories was suggested by the High Power Committee of India. High Power Committee, they have suggested, they have classified disaster in a 5 category based in happen in India. So out of this, now we are moving into that, based on that we can divide disaster into 2 categories. What do you mean that? One is the natural disaster, another one is the man-made disaster. So what do you mean by natural disaster? You know that word, natural disasters. Natural disaster, naturally occurring physical phenomena caused either by rapid or slow onset events which can be geophysical, hydrological and biological. So a natural disaster can cause loss of life, property damage, typically leave someone in economic damage in its wake, the severity of which depends on the affected population resilience or ability to recover and also the infrastructure available. For example, if you take the natural disaster, if you take into the example of earthquake, so earthquake what will happen? First it will make the property damage, it used to make loss of life also, it used to make some economic damage also. Like natural disaster, you can say that cyclone makes a lot of property damage, and flood, people used to lose their livelihood, lifestyles, and they have to move to the one location to other locations. Okay, sometime it will be short term flood, sometime it will be long term flood. So these are the things used to happen, and it used to call the natural disaster. It is a naturally occurring physical phenomenon. Okay, so in that, first thing we are going to look into that, earthquakes. So what is the earthquakes? In this session we will see about the little bit about the all the disasters, like for example earthquake, cyclone, storm surge and everything. In that, first is that earthquake. Earthquake is the result of forces responsible for the structural deformation deep within the Earth's interior. Okay, it is a geological issues. It is a result of forces responsible for the structural deformation deep within the Earth interior. So when the sudden break within the upper layer of the Earth, what will happen, resulting the vibration of the ground, which when bring strong causes like the collapse of buildings and destruction of life and property. So earthquake usually happen at the faults along the plate boundaries, and earthquake also often trigger landslide, tidal waves and tsunamis also. Like for example, how to measure the earthquake? Like we can measure the earthquake through the Richter magnitude scale, measure the size of the earthquake at its source and all. So in that, next one is the volcanic eruptions. Volcanic eruptions happen when lava and gas are discharged from the volcanic vent. The most dangerous type of volcanic eruption is referred as the glowing avalanche. Okay, there is two kind of eruption is there. One is the explosive eruption and effusive eruption. In the explosive eruption, the gas contents are high and magma is thick and viscous. So sudden release of confining pressure allows the gases to boil explosively from the magma. In the effusive eruption, the gas content in the magma is very low and magma is relatively low viscosity. Therefore, the gases boil out very less violently also. And another one is the common, we also know that it used to happen hill station regularly, that is landslide. A landslide is the movement of soil or rock controlled by gravity, and the speed of the movement usually ranges between the slow and rapid. So it can be a superficial or deep, but the materials have to make up a mass that portion of the slope or the slope itself only. So the term landslide is used in the broad sense to include downward and outward movement of the slope form material, like for example natural rock and soil. Normally it used to happen through normally landslide used to happen through heavy rain, soil erosion, as well as that earth tremors, and may also happen in area under the heavy snow also. In that, next one is the tsunamis. Tsunamis in Japanese word, it's called a harbor wave, also known as a seismic sea wave. Okay, it is a series of very large waves with extremely long wavelength in the deep ocean. The length from crest to crest may be 100 km and more. Okay, it is usually generated by sudden displacements in the sea floor caused by earthquake, whether it may be landslide or volcanic activity. So tsunamis are a series of large waves generated by the sudden displacement of seawater by earthquake or volcanic eruption, capable of propagation of over large distances and causing a destructive surge on reaching land also. In that, another natural disaster is the avalanches. Avalanche describes the quantity of snow or ice that slides down a mountainside under the force of gravity. Okay, it occurs if the load on the upper snow layers exceeds the bonding forces of the entire mass of snow. Okay, it used to happen when the upper snow layers exceeds the bonding forces of the entire mass of snow. Like for example, it often gathers material that is underneath the snowpack like soil, rock, etc. And another thing, a debris avalanche is a type of slide characterized by the chaotic movement of rocks, soil, debris mixed with the water or the ice. Okay, they are often triggered by the earthquakes and volcanic eruption also. You can say that snow avalanche can be classified as dry snow type or wet snow type avalanches. So another common natural disaster one is that we used to feel continuously, that is the floods. Floods are the regular phenomenon of the country. Almost every year, one or the other parts of the country is frequently affected by floods. And recently, you can say that Assam people are suffering from the flood, and a few years back, Kerala has suffered a lot of floods. So, a flood is a normal, regular phenomenon of the country. What do you mean by flood? A flood is an overflow of water on land which is usually dry. Okay, sometimes a water resources like a river, lake, or pond gets flushed too much with water, resulting in floods in the nearby regions also. The Ministry of Home Affairs, they are the nodal ministry of all the natural disaster. They said that floods are a temporary inundation of large regions as a result of increase in reservoir of rivers flooding their banks because of the heavy rains, high winds, cyclones, storm surge, along with coast tsunami, melting snow, or damp burst and all. So these are the various reasons for used to happen for floods. And another common problem we used to face is that extreme temperature. So extreme temperature, in the sense it may be a heat wave or it may be a cold wave. Okay, heat wave, it kills by pushing the human body beyond its limits. Okay, condition that induce heat related illness like stagnant atmospheric conditions and poor air quality also. And another opposite, cold waves means heavy snowfall and extreme cold can immobilize the entire region. So winter storms can result in flooding, storm surge, and you have to close the highways also, block the roads, and drowned power lines, and hypothermia. There are so many things used to happen through the extreme temperature. And another one is the droughts. Drought means, like, for example, drought is to defined as a deficiency of a rainfall over an extended period. For a long time, you can say that for a continuous season there is no rain at all. For a year, it may be a year or severe year relative to the statistical multi-year average for the region. So severe and rare droughts occur in arid and semi-arid zones. Normally, it used to happen like long spells of water shortages as a result of scanty rainfall, inadequate water management techniques, and sheer government neglect also. So mostly the severity of the droughts depends on the degree of moisture deficiency, duration of dry spells, and irrigation facility and size of the affected area also. So what will happen when the drought used to happen? When the drought used to happen, it may lead to food insecurity, famine, malnutrition, and epidemics, and the displacement of the population and so on. So another important natural disaster is the wildfires. Wildfire is a general term. It used to happen in the forest fires, you can say grassland fires, bush fires, brush fires, or any vegetation fire. Normally it used to happen, the causes of forest fire is it used to spread much faster. They occur more in coniferous forest and evergreen broadleaf forest. So in the hot sunny days or low humidity days, strong breeze are conducive to the rapid spread of fire in a forest. For example, you can take that in the Europes are now the present condition. Europes are suffering a lot of heat waves. So because of that, they are suffering a forest fire also. So it used to happen in the extreme temperature in the forest. And another important disaster is the cyclone and storm surges. That those who are living nearby the coastal area, they can understand that what is the meaning of cyclone and storm surges. A cyclone is a large scale air mass that rotates around the strong center of low atmospheric pressure. Okay, cyclone is characterized by inward spiraling winds that rotate about a zone of low pressure. The term cyclone refers to the storms like that cyclonic nature. Sometimes it used to be counterclockwise rotation in the northern hemisphere, clockwise rotation in the southern hemisphere. Okay, yeah, tropical cyclone is a system characterized by a low pressure center and numerous thunderstorms that produce strong winds and flooding in the rains also. So another important natural disaster is the epidemics. Epidemics, everyone knows about that. We are in the COVID situation. Epidemic is the word is derived from the Greek word, that is epic and demos. It used to be among the people. Okay, and epidemic is the unusual increase in the number of cases of infectious diseases which already exists in a certain region or population. It can be referred to the appearance of the significant number of cases or infectious diseases or something. Epidemics may be the consequences of disaster of another kind, such as you can say that tropical storms, flood, earthquake, drought, etc. also. And epidemics not only it affect the human people, it may also affect attacks animal also, and it cause local economic disaster also. So far we have seen about the brief about all the natural disaster. Now we are going to discuss about the man-made disaster. Man-made disaster is a technological or man-made disaster that is caused by the human and occur in or close to human settlements. Okay, this can be environmental degradation, pollution, accidents also. Some disaster can result from several different hazards, like more often like it used to make a complex combination of both natural and man-made causes also. For example, you can say that food security, epidemics, conflict, displaced population. So you can say that sometimes it used to happen in natural also, sometimes it used to happen in the man-made disaster also. That was we used to say used to that complex emergencies or complex disaster also. So what do you mean by complex emergency and conflicts? It is a humanitarian crisis in a country. It is a country or region or society where there is a complete breakdown of authority resulting from internal and external conflict which requires an international response. For example, if you take into our Sri Lanka, there was a political crisis happening. So due to the political happening, what's happening? Though that it was there was a political crisis. So this is what he used to say complex emergencies also. So on a national level, we can say conflict may involve warlike encounters between armed groups from the same country which takes place within the border also. So such outbreaks of war may pose large-scale medical problems such as epidemics, lack of water, accumulation of rubbish and displaced population. So it used to bring these so many things. So another man-made disaster is the famines. Famine means it is a food security emergency. Okay, so most of the root causes of famines are like a drought, conflict. It may lead to the food emergency also. For example, where continuously it used to reflect the poverty of the country. Okay, it used to reflect the debt crisis also, and it used to make the economic effects also. So it used to happen. So another one is the displaced population. So when you talk about the displaced population during COVID, we know that most of the people are moving from one area to another area, migration, so many things are used to happen. Due to continuous flood, what the people used to do, they used to move into the safer area. So it used to happen continuous displacement. And the another example of man-made disaster is the accident, transport accidents or something like, for example, transport accident means if any breakdown of any, if petrol or chemical is carrying about, and it may met accident and it may create a any major disaster also. So and terrorism, these are the things are coming into the man-made disaster. So in this session we have discussed about the what is disaster and meaning of disaster and definitions of disaster and various classification of disaster, and we have seen about the glimpses of each and every disaster also. In the future session we will discuss about the what is hazard, what is risk, what is vulnerability, how to manage the disaster and the disaster management pattern, and what are the various ways to manage the disaster and community based disaster management. We will discuss about the more topics in our future session. Thanks a lot. Thanks for listening.